Hey everybody, Rob Maurer here, and of course today we're going to talk a little bit about the US election, primarily Tesla's reaction to it. I'm sure at this point people are a little bit tired of hearing about everything going on. Of course, the race is still ongoing. Votes are still being counted. The next 24 hours should provide a lot of clarity, but regardless, it does look like we may be in for a wait of days or even weeks before the election is finalized. A quick example of that, especially for our international listeners, for example, my state of Wisconsin, Joe Biden is ahead by about 20,000 votes. The Associated Press has declared Biden the winner of the state, but the margin of victory is less than 1%, and that will allow President Trump to demand a recount. And those recounts in Wisconsin can take up to 13 days. We're going to see probably similar actions taken in other states, maybe North Carolina, Michigan, Nevada. You've still got Arizona, Georgia, North Carolina, Pennsylvania, all sort of unclear at this point in time. And depending on how things go, one of those states could make a difference. And many of them, if not all of them, could fall within a margin that would allow for a recount, which just adds a lot of time. For example, in Michigan, that can take up to 39 days. For a little bit more context on Wisconsin, as an example, we did have a recount for the 2016 general election, and that changed the result by only 131 votes. Of course, this election is sort of a different beast with all of the absentee voting. So, long way of saying it might be a while before everything is fully done, but as of market close today, the election betting odds put Joe Biden as an 82% favorite to win the presidency, and that's probably our best clue for how the markets are reacting to what has unfolded over the last 24 hours. Of course, everyone's going to have their own numbers. Those odds are going to vary by source. That 82% number is a conglomeration of a few sources, but feel free to look up if you prefer to use a different source. So that brings us into the market reaction. The market actually had a strong positive day today. The Nasdaq was up 3.9% on the day. The S&P 500 up 2.2%, but Tesla on the day actually trailed that, down 0.7%. This is after Tesla was strongly positive in the pre-market when the betting odds were a little bit more even between the two candidates. With the Democratic Party being seemingly more open to adding incentives for solar and electric vehicles, and perhaps more interested in implementing stricter emissions requirements, that if the overall market's reaction was to be up, that Tesla would seemingly be right there with it, or maybe even be outperforming. Clearly though, down 0.7% today, that has not been the case, a pretty significant underperformance. With the Nasdaq being up 4%, it wouldn't be too unusual to see Tesla being up 6 or even 8% on a day like that. So let's look at a few other stocks that may fall into a similar bucket to Tesla. Let's look at electric vehicles, let's look at solar, let's look at EV infrastructure and ride-sharing stocks, and we can see some mixed results here across the board, but a general underperformance in a lot of these electric and renewable type of categories. So let's run through these and then we can talk a little bit more about maybe the reason for that. So Tesla down 0.7%, BYD, an electric automaker out of China, up 2.7%, but still trailing the Nasdaq. Nikola down 2, say whatever you want about that stock, but it still falls into this grouping. Workhorse down 8, Arcimoto down 1, Fisker down 6. Finally then an outperformance here from Lordstown Motors. Obviously some of these are pretty small players, but then we get to NIO, XPeng, Li Auto, all of these out of China, with NIO up 6%, XPeng up 23%, Li Auto up 5%. So I put an asterisk on these in my chart here, as they all seem to be pretty influenced by updates from Citi. So Citi increased their price target on NIO by about 50% today, and they initiated coverage on XPeng and Li Auto. So all three of those stocks had a pretty significant other influence today, aside from just the election. Even including those three, the average across the board here was up 2.5%. That still trails the Nasdaq. If we exclude those last three, the average was down 1.4% for these EV makers. Similar story if we look at solar. So we've got First Solar here down 8.5%, SunPower down about 3%, Sunrun flat, Enphase up just 1.4%, Vivint Solar down 0.3%, Solar Edge basically flat. So the average across the board there down 1.7%, again significantly trailing the Nasdaq. And then if we look at infrastructure, similar story here, though I'm sure I'm missing some companies in this list. I've got Plug Power down 2%, and Switchback, which is acquiring ChargePoint, down 4.7%. Finishing off with ride sharing, and then we'll circle back. Uber and Lyft both up significantly today, 10 to 15%. This is due to California passing the highly anticipated Proposition 22, which means that Uber and Lyft can continue to classify their drivers in California as independent contractors rather than as employees. I haven't personally done enough research on that to determine if or how much of an impact that would have on a possible Tesla network. Anyway, if we shift back here to EVs, to solar, to infrastructure, to me, it definitely seems like a pretty consistent underperformance on the day. My personal best guess on this, though I would emphasize again that this is a guess, we're all working purely in speculation here, would be that these moves have been at least partially driven by what seems to be an underperformance to the expectations of Democrats for how the Senate races have gone. Again here, this is still early, a lot of these races also still being decided, but it does seem pretty clear that the Democrats have underperformed, and the odds of the Republicans holding the majority of the Senate seem to be much higher than they were heading into the elections, at least certainly going from what the polling was indicating. So I think what the market expects right now is Democratic president, Republican Senate, Democratic House, and with that split, it may be a little bit more difficult for the Democrats to push some of their agenda items through, some of those being an electric vehicle incentive, extension of the solar federal tax credit, perhaps stricter emissions requirements. So just in my personal opinion, I think that may be pulling down these stocks a little bit today, but who knows, it could just even boil down to technicals where people saw weakness in these stocks and shifted their money into stocks that were going up 6 or 8% today. One thing I will say here is that even if there is a Democratic president, a Republican Senate, a Democratic House, that certainly doesn't mean there's no possibility of an electric vehicle tax credit or a solar tax credit extension. On occasion, there has been a little bit of bipartisan support for bills such as that, most recently back in December of 2019, where a bill that would have raised the cap for each manufacturer in the US from 200,000 vehicles to 600,000 vehicles seemed to almost make it through, but then seemed to have been shut down with the White House, Forbes at the time saying, quote, "In last-minute negotiations over a massive package of spending bills designed to avert a government shutdown, the EV provision was lost in the shuffle, and that was the outcome Republicans and President Trump wanted," end quote. And then around that time, many Democrats in Congress said the main pushback was coming from the White House. So a Republican Senate in and of itself does not eliminate that possibility. There's always a lot more complexity, a lot of things that work as give and takes in those type of situations. So just to, I guess, kind of wrap this up, the reason I'm talking so much about this is because I think it does have an impact on the stock. Personally, I don't really care all that much about it. I think Tesla's going to have enough demand to sell every vehicle they can make for quite a while here. I think the tax credit would be nice. Personally, I'd rather just see a level playing field, whether that's with Tesla and other electric vehicle makers or with electric vehicles and internal combustion engine vehicles and some of the subsidies that benefit those. But I think if things remain status quo and nothing really changes, Tesla's in a really good spot. An additional credit wouldn't hurt. But if we think longer term, Tesla's going to be trying to deliver 1 million, 2 million, maybe eventually even 5 million vehicles per year in the United States. And at some point, it just doesn't make a lot of sense to have a credit on all of those sales. Maybe you could do something around income or something like that, but it's not like the US is going to put a $7,500 credit on 5 million sales from Tesla. That would be more than $35 billion per year. So long term, I don't think it's really going to matter too much. And short term, I think Tesla's in a good spot. But I still think that perception is important and probably influential on the stock at this point in time. All right, so hopefully we made it through all the political stuff. I'm not trying to give a view on one side or the other. I'm just trying to share my thoughts on what I think the reactions are here and how that may impact Tesla specifically. And obviously there are other factors here, but there's no way to kind of capture that entire political thesis of both parties. And that would probably take up the rest of time of Tesla Daily for eternity. So we will move on now to some other automakers. We'll talk about BMW here. They had their earnings report. And quite a few of you on Twitter today tagged me mentioning an article from the Detroit Bureau about BMW's earnings call with the title of BMW Does a Complete U-Turn on its EV Program. So, as somebody that has been extremely critical of BMW's power of choice strategy, which is their strategy of developing these apparently or so-called flexible vehicle architectures rather than a dedicated platform, I was excited to see this headline. So let's take a look here at what BMW's CEO Oliver Zipse said on the call. He started out by saying he wanted to focus on two things in this call. First, their perspective up to 2025, and then their perspective for the second half of this decade. So after talking about their vehicles and their short-term plans, he said, quote, "Let's move on to the second topic, our perspective for the second half of the decade. We expect demand for fully electric vehicles to continue increasing significantly from 2025 on. Exactly then, just at the right time, we will launch phase 3 of our transformation. Here, in addition to electrification, the focus will be on digital connectivity and volume capability. In 10 years, we aim to have more than 7 million electrified BMW Group vehicles on the roads, 2/3 of them fully electric. The company is already scaling up for this, both strategically and technologically." End quote. So I'm going to pause there. That 7 million vehicle target, that's nothing new from BMW. We've heard that before. Same thing with the 2/3 fully electric target. So that's about 4.5 million vehicles that are fully electric by 2030. That's only, 450,000 per year on average, or less than Tesla's current annual production rate. And of course, that would likely follow some sort of scaling up S-curve, meaning BMW wouldn't actually hit 450,000 fully electric vehicles per year till sometime after 2025. So nothing new there. He then continues on to talk about in-car digitalization, but then he says, quote, "Second, underlying product development and its implications for our vehicle architecture from the middle of the decade. Our new cluster architecture is geared towards electric drivetrains. It is organizationally connected to all divisions, from markets, finance, procurement, development, and production, all the way to sales and marketing. This gives us greater leverage and makes us much faster, also in our cooperation with partners. The objective is for the new architecture to create an overall optimum. Our new plant in Hungary will play a key role in this, ramping up the new BEV-centric architecture from the middle of the decade." End quote. Okay, so here BMW is talking about trying to create an overall optimum with this new architecture, which they call BEV-centric. So we don't get a ton more information than that. This could be, I guess, a step in the right direction of a dedicated, fully electric vehicle platform, but they do say BEV-centric, and that is not necessarily the same thing. And of course, as we have come to learn, those little differences can be important. I was hoping there would be a little bit more information or questions on this in the Q&A portion of the call, but BMW doesn't seem to have posted the audio of that available online yet, and I haven't been able to find a transcript for that portion, so I'll keep an eye out for that. Hopefully somebody asked, because I don't really think the Detroit Bureau's characterization of BMW doing a complete U-turn on their strategy here is accurate. If we go to BMW's earnings deck, also from today, we can see that they talk again here about one platform that serves all, highlighting that it can be used for a combustion engine, a plug-in hybrid, or pure electric. They talk about that being from 2021 on, and then on another slide, they continue to mention their power of choice, saying, quote, "Our customers decide what is right for their needs," end quote. So when I saw that headline from the Detroit Bureau, I thought maybe BMW had done a U-turn and had somehow very quickly figured out what I believe to be flawed strategy that they have, but after digging in here, I don't think I see any evidence that that is the case. If anything, maybe they just sort of are slightly starting to figure out that eventually they're going to need a dedicated electric vehicle platform and are starting to at least consider and talk about that idea. So maybe a small step in the right direction, but probably not far enough or fast enough. All right, that will wrap it up for today. As always, thank you for listening. Make sure you're subscribed and signed up for notifications. You can also find me on Twitter at Tesla Podcast, and I'll see you tomorrow for the Thursday, November 5th episode of Tesla Daily. Planning to have an interview episode tomorrow. Not Tesla focused, but hopefully something you're all still interested in. So I'll see you then. Thank you.